Hi, my name is Paul Heaps. I'm from Real Property Management Southwest Michigan, and today we're going to talk about the tax benefits of owning investment property. Oftentimes, in fact, many times or most of the time, owning investment real estate is a great investment. But sometimes people, when they go to purchase a property, they don't realize some of the tax benefits that can come from owning investment property. So the first thing you need to do is kind of think of it as a business. So when you buy a rental property and you own a rental property, you're going to have income and then you're going to have expenses that you can write off on your tax return. So, for example, you're going to have insurance. Typically, can write off mortgage interest. You're going to have utilities. You may have property management fees if you hire a property manager. All those are typically tax deductible. And then in addition to that, you're going to be able to depreciate the property. And by depreciating the property, what I mean by that is the IRS lets you deduct from your taxes every year an amount they call depreciation. So basically what you do is you take the price of the property, and this is just a ballpark what you typically do, take the price of the property. If it's a residential property, they let you depreciate it over 27 and a half years. So you take the price, divide it by 27 and a half, and that's how much you can take in depreciation every year. So depreciation is not a real cash expense. So in other words, you don't have money going out the door each year for that, but you use that on your tax return, and it lowers your taxable income. So at the end of the day, oftentimes when people own rental property, any income they make from it is a lot of times tax-free because of the depreciation. And then in addition to that, what's kind of nice is oftentimes if you have extra losses from the property. So in other words, you've done all your income and expenses and you actually have a tax loss from the property. That's typically what they call passive losses. So you typically and oftentimes can apply those passive losses to other income you may have and that type of thing. That's going to depend a little bit on your tax situation and so on and so forth, but that's one of the benefits also. So if you have any other questions, we'd be happy to help you.